Hi, everyone. Good morning. Thank you for joining us. We're going to give it a few more minutes as I see all the attendees rolling in now, and we'll start shortly in a few minutes. All right, so hello everyone, good morning. Thank you for joining us today to talk about year-end giving, as many individuals are looking to give to nonprofits over the next few months. I'm April Kushner. I'm a partner with Sax and co-leader of our not-for-profit practice. Sax is an accounting, tax, and consulting firm. We are ranked 84 out of the top 100 public accounting firms. I don't think I'm alone when I say that we have a passion for helping nonprofit organizations. So joining me today is Marie DiCaprio, partner and wealth advisor. And I'm also joined by Lauren Frary, who recently joined our Sax not-for-profit team and brings years of experience as a not-for-profit professional. So I will let Marie and Lauren tell you a little bit more about themselves and the knowledge that they bring to this webinar today.
Thank you, April. Thank you. I'm Marie DiCaprio. I am a partner and a wealth advisor with Sax Wealth Advisors, which is part of Sax LLP. We here at Sax Wealth Advisors work with individuals as well as nonprofits and small businesses to manage wealth, manage investments. So we work very closely with people who are donors and people who are actually nonprofits on the investment side and also on the planning side. So really excited to be here today and hopefully share some insights from what I deal with, what we deal with sort of day to day as we're dealing with individuals.
Okay, Lauren?
So let's see.
All right.
Am I there?
Ahead,
There we go. So good morning, everyone. I am really pleased to be a new member of the Sax nonprofit team. I come with 35 years of experience in the not-for-profit sector and 15 years experience as an executive director. My goal in my new position is to provide enhancements to Sax's already comprehensive services for not-for-profit sectors, but I will also bring consulting in kind of a full service menu. I will be offering organizational assessments for boards and governance, for strategic planning, program development, fundraising, disaster planning and recovery. A full range of organizational assessments are available. I'll also be concentrating on supporting organizations who are going through some sort of leadership transition and or succession planning. And lastly, I'll be offering a series of webinars and seminars customized to each not-for-profit's unique needs. So I look forward to being on this webinar today and getting started in my new role here at Sax.
All right, thank you. So our agenda today starts with donations from the individual's perspective, and then we're going to move into the organization's perspective. So if you have any questions throughout the presentation, go ahead and type them into the question box. I'll be monitoring those as we move through the presentation. We'll likely address these at the end of both of their parts, and we'll take some questions at the end and have more of a discussion. And this webinar is also being recorded, so it'll be available on our website after we're all finished, and that way you can share it with anybody else in your organization or anyone else who may have missed us today. So thank you so much again for joining us, and I'm going to turn it over to Marie.
Great, thank you. Well, I'm excited to kick this off. So how this all came about is April and I were sitting and talking one day, and I was telling her of my experience. My dad is 87 years old, and he had a stroke a number of years ago. So he really relies on me to handle a lot of his financial transactions, which is lucky for him because I'm a financial planner. So but one of the things that he likes to do this time of year is make donations out of his IRA, which we're going to talk about. And as I was going through all the websites and trying to, the overarching theme was the lack of information that was available to someone like me who wants to make donations. And how do we make the information easily accessible so that people like me, can get what they need and get those donations out. And so as you go through this webinar with us, and hopefully, you'll gather a lot of information and you're looking at your own websites and your own systems, think of me, sitting at my parents' dining room table at like 11 o'clock on a Tuesday night, trying to just figure out, how do I get this money to the charities that my dad was interested in? So the first thing I think is pretty easy, right? There's still people who want to make cash donations. And in this day and age, I think most organizations do have, and if you don't, you should really consider having a donate now button, right? Pretty much front and center, and have the ability to take credit cards, debit cards, PayPal, all those sorts of things. And there are institutions and organizations that you can work with to help set that up for you, right? Because the ability to take credit cards, you need to have those systems in place on the back end, but it really should be seamless and straightforward for the donor. There's still so many people who like to write out checks. We know that, right? So you want to be able to have on there also is how the check should be written out, the way that you want to be able to receive these checks. And more importantly, where the checks, the address that checks should be mailed to. I can't tell you how many, places, websites I went to that it just wasn't clear. There was an address and then another address, like make it really clear. Again, think of me, 11 o'clock at night, tired. How do we make this, as easy and as clear as possible? I think, one of the things that I found, and I think, donors in general find, is there a name or an email or phone number of one person who can sort of field questions like this, right, that a donor may have? So including that information, having a point person who can just address any kind of question like this, I think is really important. Very often, many donors are older and they still, they like to pick up the phone and talk to someone. So it's nice to be able to have one person who's kind of in charge of this, who can answer their questions. But it's also nice to be able to have an email where, again, when the child of the donor is trying to get information, they can do an email or something like that, which is much more time efficient in some ways. So again, I think that this is pretty standard that people should have. We'll go to the next slide. All right, so the next thing that people really that donors like to do is make donations of individual stock. So for the prime reason that a donor would want to donate an individual stock is because if they sell the stock to then give you the cash, to donate the cash, they actually would potentially have to pay tax on that sale. So rather than incur any capital gains tax on any sales, what people like to do is transfer the stock directly to a charitable organization, and then they would still get the tax deduction for the fair market value. However, for you to be able to receive such stock donations, the organization, needs to have some kind of brokerage account with which to receive these shares of stock. So you need to have that set up so that the client, the donor, can send the shares in. Again, you'd need to have a point person. It could be an internal person at the organization, or it could be your wealth advisor. So for the nonprofits that I work with, their constituents, their donors would contact me directly, and I would let them know where exactly to send the shares to. So you need things like the account number, and you need what's called DTC instructions to be able to send shares of stock. This is what the donor needs for this information. Once the shares are received by the organization, you have to be able to calculate the fair value of the gift, which is just the average high and low prices of the day on the day of transfer times the number of shares. So again, as the wealth advisor, or the broker, we are the ones doing that for you. And Lauren will talk a little bit more about this, but once you receive the shares, now you need to have a board policy for what are you going to do with it. Are you going to hold the shares? Are you going to sell them right away? Are you going to sell them when there's a gain? There's so many different iterations, and you can decide to do whatever you want, but you would need to have a policy set up so that it runs like clockwork. We're not trying to figure out every time we get a stock donation, oh my goodness, what are we going to do with it, right? And it could be too, like, do we sell it and move it to a different account? I have one organization I work with that we do that. So again, you want to have it planned out and know, okay, when this happens, when we get these stock donations, this is what we're going to do. And even in a year when the market is down, which if anybody, you can't help but read a newspaper or listen to the news or anything without knowing that the market is down this year, people still have shares of stock that are old, that have very low cost basis, that they still have an incentive to gift those shares. So really, regardless of what the market is doing, people have shares of stock that they would be willing to donate. And I would actually argue, in a year where the market is down and people might be feeling a little nervous about the economy or interest rates or whatever, they might be more willing to give shares of stock than to write a check or give cash, because shares of stock seems a little, kind of one step removed from actually like feeling like cash. So good thing to keep in mind. And I think, a lot of people do this. It's very, very common. You just need to be set up on your end for when you receive these donations. Let's go to the next slide, please. So qualified charitable distribution is also becoming a very, very popular way to make donations to charities. The way it works is a donor can donate up to $100,000, and it has to come directly from their IRA. The donor has to be at least 70 and a half. The way it works is the donor has to contact the IRA custodian. So let's say if it's Vanguard or Schwab or Merrill Lynch or Morgan Stanley, and then a check is issued from the IRA and made out to the organization, but then mailed to the donor. And then it is up to the donor to take that check and forward it to the institution. So here again, knowing what the right title is for how the check should be addressed is important, and having the right address for where you want these checks to go. So there are many people using this strategy because once you reach age 72, you have to start taking required minimum distributions from your IRA. And the IRS allows donors, individuals, to, rather than taking possession of their required minimum distribution, that money can be sent to a charitable organization. So you make the charitable distribution, and then the donor is not, that money is not taxed as income. They don't get the charitable deduction, but they also do not have to include that money as income, which they would have to if they just were taking their required minimum distribution. So, you know, look, every donor should consult with their tax advisor or their wealth advisor. But, you know, most people who are taking or having to take large amounts of money out of their IRA every year, they must, because it's the minimum that must be met, are considering doing these qualified charitable distributions. And this is how it works. So if someone calls you and says, hey, you know, I want to send you money from my IRA, understand that this is really the process and procedure. The donor gets a check issued from the custodian, they get the check, they pass it along to you. So again, having this information, knowing how it works sort of behind the scenes, and making sure the check ends up in the right place in your organization is very important. Here again, regardless of what the market is doing in any given year, individuals over the age of 72 must take out this money from their IRAs, regardless of whether their IRA is down 10% or not. So it's important to know, again, it's just a benefit to you, and it's really regardless of what is happening in the marketplace. Let's go to the next slide. So the next thing that I think is important for nonprofits to look into is how to work with donor advised funds. So I'm here highlighting, the Fidelity Donor Advised Fund, which is called Fidelity Charitable, because they are the largest donor advised fund. And the way it works is donors contribute to the donor advised fund, and then Fidelity Charitable will make grants to IRS qualified public charities. And that obviously the grant requests must comply with program guidelines. The donors who are logged into their website can search for nonprofits by name or tax ID number in the database. So what you want to do to make sure that you can be found is to reach out to go onto the Fidelity. That's just one. Schwab has one. I think BNY Mellon. I mean, those are the big ones, but there's many, many donor advised fund. I know New Jersey Community Foundation of New Jersey has one also, as many. You want to make sure that a donor can find your organization so that they can make grants or instruct Fidelity to make grants to your organization. So you want to go onto the website, make sure your organization can be found, that the information is correct, that the tax ID number is correct, and can be found. Can we go to the next slide, Alex? Here's a snapshot from the Fidelity Charitable The other thing you can do, which I would certainly make sure you're set up for this, is Fidelity then, again, I'm just using them as an example, there are others, you can set up to make sure that money is wired directly to your bank account once you receive a grant. So you would sign up for the EFT transfer. So I would this is, I think, something that's very easy, low hurdle, low to no hurdle to get over, to get this set up so that as donors are wanting to make grants to your organization, one, they can find you, and two, you can receive that money quickly and easily. And then, of course, once you receive the gift, understand and know how to, and Lauren's going to talk a lot more about this, but how to, thank the client and know who the client is that actually sent you the donation. So I think those, the four things that I've discussed today, and again, I hope that, and I think, Lauren's going to talk about this also, the overarching theme is, how do we streamline the information? How do we make sure all the information is there to make it easier for the donor to get donations to you, right? The easier it is for them, the better it is for you. So at this point, I'm going to turn it over to Lauren, who's going to talk a lot more about what you should be doing on your side.
Thanks, Marie. I want to start with saying that you'll notice that Marie and I are going to talk about some similar things, but it's information that I feel strongly is worth repeating. So I'll apologize for redundancy, but they are very, very key points in your end of year giving plan. So let's start with some fun facts in terms of where we see annual giving, especially at the end of the year. And I think the second bullet is key. Look at this, 12% of giving occurs the last 3 days of December, which is why you must be prepared to act quickly and in a timely and accurate manner when you're working with your donors, because, and I'll talk about this later, they will want an acknowledgement letter before January 1st. So, got to do some planning. Bottom line, end of year giving can be a significant part of your overall fundraising strategy. Please consider, if you don't already, creating an annual strategic plan for your fundraising efforts. This way, you can properly allocate your time and resources, but also have an annual fundraising goal. I think that's really important. And it's unfortunate about the end of year giving being right in and among the holidays, but it will be important for you to have resources available those last few days of December to be able to receive those donations and to honor your donors. So planning. Start your planning early, like now. Now would be a good time to start your planning. The first thing you want to do, though, is review your last year's campaign, if you have a formal campaign, or look at last year's end of year giving, and look at these things. You want to look at the financial results. What did you raise? Look at both the donors who were new and your ongoing or your recurring donors. We all have those donors that we can rely every December will send this particular check. So just be aware of who your audience is. Also, look at your campaign. What worked? What did not work? What did people respond to when you were sending your messaging to? What did people not respond to? So just be aware of those things from last year's campaign. And then from there, you can plan your message or the theme of your end of year campaign, but also be sure that it's compelling and mission focused, meaning you want to tell a story about what it is that your mission does and the impact of giving. When you create your financial goal, you also want to make sure that it's realistic but challenging. And this is a really good time to get your board engaged and work with your board on participating in your end of year giving appeal. It is really important to be able to say to your donor base that your board is engaged not only in governance, but financial support of the organization. And if you can achieve 100% board participation for this campaign, all the better, and you should absolutely put that in your message. The other thing that you want to make sure you're doing is you want to make sure before you get to your end of year campaign that you have a gift acceptance policy, a donor acknowledgement policy, and an investment policy statement. These are 3 key policies that you must have so that you can properly receive donations and properly acknowledge your donors. So what should your gift acceptance policy have? Oop, go back. Sorry. So your gift acceptance policy should talk about how and when you'll acknowledge your donors, and in what form, but it should also talk about what you will or will not accept as a gift. And I was joking with Marie earlier, and I had an occasion when I was an executive director that someone wanted to donate an airplane. And fortunately, we had in our gift acceptance policy that we won't accept an airplane. Well, why won't we accept an airplane? Because the time, energy, and resources to manage that type of donation outweighed the value of the gift. So just be clear about what you will accept and what you won't accept, and then how you will acknowledge your donors. Your investment policy statement is important. Again, if you don't already have one, consider doing that sooner rather than later, because if you do receive one of those gifts that Marie talked about, you want to have that investment policy statement in place. You don't want to be scrambling after you receive a gift and then having a discussion with your board and not have everybody already in agreement about how you will manage those types of gifts. So those 3 policies, super important. You should have them in place now. If you don't, give me a call and we can talk. Okay, so next slide. So we really want to make this, as Marie kind of drove home, we want to make this as easy as possible for our donors. If you are a family-based or a membership-based organization, you have families who have been with your organization probably for many, many years. And we do know that our senior donors tend to write checks, and our younger donors tend to like that donate now button. So just be prepared for both. But make sure all the information that a donor needs is easily found in one place. So if you have a donor page on your website, just go back and look. I can't tell you the number of times I've gone to a website and the organization's EIN number is not right there for the donors, and then they're looking for it. So just make sure that you have your information all in one place. Make sure you tell people what to write in the memo line. A lot of times checks just come into an organization and it's difficult to know how to apply it if someone hasn't written a note about how it should be applied or which campaign they're donating towards. Again, as Marie said, make sure you have a donate now button and a giving platform. If you don't, consider creating one. Also consider putting on your page, asking your donors if they would up their donation by the few dollars that it costs to offset the fee to have that platform. And many, many, many donors are so happy and willing to do that because they want their full donation to go to the organization, not to fees. Okay? And again, as Marie said, make sure that the contact person at the organization and or the brokerage firm is easily accessible to your donors. Just remember that end of year giving is often very, very last minute. And donors don't want to be searching for information. If donors find themselves searching for information and they can't get it quickly, you run the risk of them moving on to the next charity on their list. So this information is vital, and it's super important that it's all in one place. Okay, so consider your donor base. You want to be very strategic about your end of year giving campaign. So you want to break your donors into 3 groups: current, past and or lapsed, and new or prospective. If you have several fundraising events or campaigns or appeals within the year of your organization's budget, please consider how you want to strategically split your donor base into those appeals. We find that, like I said earlier, community members and families and members of the organization tend to prefer the end of year giving campaigns. Your larger corporations, business partners tend to like to give towards things that would create a sponsorship or some kind of public acknowledgement for them, which would be your galas and your golf outings and your walks and your runs. But just know your donors and know which campaign you want to solicit which donors. I think you run the risk of donor fatigue if you solicit everybody for everything. So just consider that grouping your donors. Track giving from each group to assist with your analysis. So you should understand who's giving to which campaigns, and then you target your campaigns towards those donors. Also consider each year, who can you solicit that is new? I have found year after year after year that when you engage volunteers in your mission and they do a project with your organization, they will turn into donors very quickly. So consider your volunteers as potential donors for your end of year campaign. Okay. And next slide. So launching your campaign. Again, you want to be this to be very mission focused. You want people to see the faces of your organization. So create a story. Use a multimedia approach. So have that campaign available in both flyer form, postcard form, on your website, in your social media, so that you're hitting more people and kind of appealing to their way of giving. As I said earlier, many older donors still prefer a postcard, a letter. Our younger donors definitely prefer social media. So you can also keep your donors and your audience updated on your progress towards your financial goal regularly. So if you launch your campaign a month before the end of the year, each week, let everybody know how you're doing. Let them know how far you are from your goal, and try to create that sense of urgency around the timing and the need to meet the goal for the organization. Also, do not forget to remind your donors of any tax benefits to giving at the end of the year. You can certainly pull information off of the IRS or work with your wealth manager to get language that will support your campaign, right? And then I just want to take a moment to talk about trying to raise funds to cover a deficit fund balance. Certainly these have been unprecedented times, and organizations are still recovering from COVID. And so although it can be done, it's not ideal. If you are, however, going to use your end of year giving campaign or appeal to cover a deficit fund balance, make sure that you do that with transparency. And by that, I mean, make sure your donors understand where their giving is going to go. And it can be done very strategically by talking about your continued efforts in recovery, or the need to raise funds because the cost of business has gone up, or because you are still working on getting enrollment back into your programs, whatever it is. Again, not ideal, it's understandable, but just make sure that it's done with transparency, so our donors are not misled into thinking that their dollars are going to go to a program when they're really going to go towards operations. Okay, next slide. All right, and this is the most important thing. Thank, acknowledge, and recognize. So you should have a donor acknowledgement letter drafted and ready to go now. It can be customized or personalized quickly with the person's name, the donation, and it should be sent out quickly after that donation. Many donors will give to, during the last few days of December, and they will want that letter dated prior to January 1st. So just be prepared to accommodate these kind of last minute requests. Go back to your social media platforms and acknowledge all of the participation and the great fundraising that occurred during your appeal, and provide an impact message, right? So your post-appeal thank you. So you can go back after your appeal is over, send a second thank you note that is more personalized and outlines specifically what the funds raised will be used for to support this mission, your mission. If at all possible, this thank you note should have the signature of both your executive director and your fundraising staff, so that people understand that the agency, the organization, is fully engaged with their donors. It's a really good idea, and donors really like to know that the executive director or the senior staff are participating and really acknowledging their donor base. For your top donors, consider an invitation to visit the program or facility that their donation supported. I understand that sometimes this is not feasible, especially in these post-pandemic days. But if a visit isn't feasible, a picture of the beneficiaries of the donation would be equally appreciated, or even a personal thank you note from the beneficiaries. I think the more personal you can get in these thank yous, the more likely you will start to move your donors up to the next level of donation. So you want to keep them engaged and aware of your organization's activities. And just a final note in terms of thanking, acknowledge, and recognizing, you can really never thank your donors enough, but also consider, along with your end of year annual appeal, possibly having an annual donor and or volunteer recognition event. So you can bring people together around your organization, around your mission, and so you can publicly acknowledge and thank them for all of their contributions. And that's all I have.
All right. Thank you so much, Lauren. Thank you, Marie. I think that's all a lot of good information for everyone to consider. Keep in mind too that when donors are looking to give to an organization, there are websites out there where they can research your organization. So there are websites such as GuideStar and Charity Navigator that put financial information up there based on your 990 tax returns if you file them, information about your organization. And that's where donors are going to look sometimes to see a little bit more information about your organization before they give. But I do think donors tend to give from the heart for missions that are close to them and near and dear to what they believe in, or what's close to their hearts. So there are different things that a donor is going to consider when they're donating to you. So Marie, I have a couple questions here in the chat box for you. One of them is, does charitable giving out of an IRA qualify as RMD?
Yes, it does. That's the beauty of it. So if you have, let's say somebody has an RMD of 150,000 that they have to take out of their IRA, and they give 100,000 away to charity, that qualifies towards their RMD calculation. So then they only have to take out another 50,000 in my example. So yeah, this is why I think it's so compelling, is because people have to take the money out once they're age 72. And if they send it directly, if they make the charitable distribution, that does not hit their tax return as income, whereas regular RMD that's not given to charity will be considered income and taxed as such.
Mm-hmm. Okay. All right. And so, Lauren, what do you find is most common with investment policies? Are they long? Are they detailed? How specific do they need to be? What do you see as a common practice around investment policies?
So investment policies actually don't have to be long or complex, but they do have to outline, and certainly you would do this along with your board of directors and your wealth manager, but it does have to outline the goals of the organization, but also your risk tolerance. For most not-for-profits, the risk tolerance is low. So it outlines your risk tolerance, the ratios in which you want to invest your funds, and also who and when you will kind of rebalance your account. There are many forms, structure forms, skeleton forms. You can actually Google what should be in an investment policy statement that you can bring to your board and start to craft it. You don't have to reinvent it by yourself. There are a lot of examples out there, but again, it always starts with a risk assessment and the future goals for that investment, and then you can craft the policy from there.
And I would actually add, because I have been involved in crafting investment policy statements with organizations, is that it's really a fluid document. It's not, you don't do it, put it in a drawer and never look at it again. It's really meant to be a living document so that as the situation changes, as the needs change, as the goals change, as markets change, you can write that into your policy. So that what I really love about it is it's kind of can be like a historical document. You know, somebody looking back 20 years from now, they could look back and say like, well, why did they open this account? Or why do we have this money invested this way? That should all be in the investment policy statement for that time. So I would say I think agree 10,000% with Lauren. You have to have one, craft one, make it your own. You know, decide what's right, what's best for your organization, but then make it part of the policy that you're going to look at it, whether it's once a year, once every 18 months, whatever it is, keep going back to that. It's important to do because as the organization changes, you want that to be changing with you and being up to date.
Yeah, absolutely. And so if an organization gets a stock donation, a question came up that says, is a nonprofit required to book the value of the transferred stock on the day of the transfer, or if it's converted to cash based on the settlement amount the next day?
So we usually report both pieces of information to the organization. And my understanding is for the organization, it's what they cashed it in for, if they cash it in.
Yeah. My opinion would be there's probably not a significant difference between the two. Yeah. And to make the accounting a little more simplified, I would probably also use the amount of the cash that you receive if there's a difference between the time of the donation and when you cash in the stock.
Yeah, exactly.
Yeah, absolutely. Another question here. You mentioned having 100% board participation and to share this message. Is this message to be shared as part of our year-end giving campaign to the public? Please clarify.
So what you can do is there's a couple of things you can do. One, you can recognize the board participation from your previous year's campaign, right? So as you're going into your campaign, you can say, hopefully you can say 100% of our board participated last year and we expect the same this year. As you're going through your campaign and you're updating your donors on your website or however you're going to update people on your campaign, you can again start to acknowledge the percentage of board members that participate. Now, I think that this is a really important conversation to have with your board before you launch that campaign and set the expectations. I think not-for-profit executive staff really need to set the expectation with their boards about participation in fundraising. And it doesn't have to be a dollar amount, right? Because we ask a lot of our boards, but you could just say, we expect 100% participation. And if that means you're going to give us $100 or $1,000, that's not the point. The point is getting your board engaged and be able to tell your other donors that they are engaged. So when you launch your campaign, talk about what they did last year, and then keep people updated and try to get your board to participate early on or be the seed money for your end of year campaign, meaning ask the board to give before you launch the campaign so that you can say my board has already given 100%. So there's a couple strategies around that, but I think it's an important board conversation.
Yeah, I agree. And in terms of the investment policy, we probably didn't touch on this, but the question came in about whether or not it's something that should be visible to donors. An investment policy, I think, is really going to be something you just keep internal, like your conflict of interest policies, your governance type of documents. You're going to keep an investment policy really for you internal. This isn't something that you would give to your donors. But if a donor did reach out to you about donating something like an airplane, this is where you would say, you know, it's really outside of our gift acceptance policy or our investment policy of, you know, as Lauren said, it's the time and energy to manage that gift really outweighs the value. So as an organization, you would decide, you know, what type of gifts you're not going to accept and what kind you are.
Yeah. And I would also add to that, I would agree. And I would also add, I think that having an investment policy statement actually will attract donors, right? Because I think if people want to make, especially a substantial gift, they're going to want to know that, they don't necessarily have to see it, but they're going to want to know that you have a policy and a way to invest your assets and what your strategy is to preserve and grow, potentially grow, you know, that money and use it wisely. So I think it's really important to have, even if you know, have very little today to invest, you're just laying the foundation for the future. So
I would also add that, especially when it comes to the gift of stock, right? I have had in the past a donor say, I want to give you a gift of stock. What are you going to do with it? And at that point, again, you don't want to give them your investment policy statement, but you do want to say, according to our investment policy statement, we're required to sell that and invest it thusly, right? You can reveal what you're going to do with their particular donation, but I absolutely agree. I wouldn't send that out, you know, globally.
Yeah. And I don't know if either one of you have any experience or guidance around cryptocurrency gifts. Someone brought up the question saying they haven't seen any yet, but there could be in the future. Anything that they should know to be prepared right away or get them started?
Yeah, I think we've actually had that question, and I personally don't have an answer yet, because a lot of the larger brokerage, like the Fidelity and the Schwabs of the world, they really don't accept crypto. I mean, we can't hold cryptocurrency in any accounts. I believe that will change, and it's changing quickly. But my assumption is, and I know that there are I've heard of charitable organizations accepting, you know, crypto. How they must have to, again, the premise remains the same. You have to have some kind of account that can accept that particular investment. So with stocks and bonds, it's pretty easy because most brokerage firms, you know, every brokerage firm takes that. You need to find the type of exchange and have an account. that will receive crypto. And so maybe it's a Coinbase, maybe it's a PayPal, I'm not sure. I haven't had to delve into that world yet. But I think as it becomes much more mainstream, we are going to see the Fidelities and the Schwabs of the world figure out how to take it. But before then, we have to figure out how to hold it. And then again, have a policy for what to do with it, right, when we get it. Lauren, I don't know if you have any more insight into that.
Yeah, I would say, again, as you review these policies, and I will agree with Marie that they should be coming up at least once a year, especially with the economy changing so rapidly. But I would absolutely start to craft some language around gifts of cryptocurrency. And even if it's a statement that at this time we will not accept, but we'll consider, in the future or whatever, I think it would be prudent to get it in there and then review it every year to see if that is a viable donation for your organization in the future.
Mm-hmm. Yeah. And you mentioned, Marie, making sure that you have an investment account or a brokerage account to be able to accept some of these gifts or stock donations that may come in. What if an organization doesn't have a wealth manager and they do end up getting a stock gift? What would happen then?
I don't know how they would be able to receive that gift. You need to have a place to receive the gift. That's the first thing anybody who wants to donate stock will contact me or the organization, say, where can I send the shares to? So you have to have an account to receive them. There's no longer, people don't have stock certificates anymore. And I would never recommend taking stock certificates from people if they did have them. Yeah, you need to have some kind of account. I mean, there's ways to open brokerage accounts, even without a wealth advisor, but you need to have that to receive the stock.
True. Very true. Yeah. All right. And so, Lauren, I really thought it was interesting, the stats that you had on there, that 31% of giving is done in December. So I do think that's a big piece why we wanted to have this webinar now in October before the end of the year, to kind of give everyone that perspective of what the individuals need and what the donors need and what they're looking for as they look to give to not-for-profits in the next few months, and then what nonprofit organizations can do to be prepared and what they can do in order to receive that money. And I really liked your suggestion of having that donor letter ready to go, because I have also seen that happen where a donation comes in on December 28th or 29th. The stock is then cashed in or converted in January. I have seen that as well, the question of whether or not you record it at the stock value, whether or not you record it at the cash value. And yes, absolutely, donors would want their thank you letter and their acknowledgement letter when that stock's being contributed. So, yep, so I've seen it as well on my side.
Yeah, so don't plan on taking any vacation time the last 3 days of December.
I know.
Yeah.
And that ends up being the week between Christmas and New Year's.
Yes,
and I know a lot of people
exactly.
like time off.
Yeah. And I do, just so you know, I'm doing my part in trying to encourage donors to give before December 30th. So there's really no reason for it, right? You can easily give in October, November, every other month. But people still fall into that trap of, to the end of the year, it's time to give. Yeah.
Yeah. Marie, do you find that some of your individuals that are donating give to the same organizations year over year?
Usually. It's very common, yeah. And they might have one or two sort of like pet, organizations. But I think, so I think from the organization standpoint, you want to figure out who those donors are, because they're usually willing to give more, right? So tap into those people and say, can they give more? Those may be the people who might be interested in doing an IRA, qualified charitable distribution for 100,000. So yeah, usually the same, but I think always open. I mean, I have people who, decide to get very charitable at a certain point. Maybe they've had some windfall in their life, something has happened in their life, and they're really out there kind of looking, okay, maybe they have a few that they know that they like, but they're kind of, either in an area that they're interested in or just in general kind of looking. So I don't think it ever hurts, because people are people who are charitable are charitable. They like to give away money. So
I like to help others.
Yeah.
Yeah. So, all right, if Lauren and Marie, if you have any last remarks.
Again, I think planning is key, and having all of the right structures and policies in place now will certainly make your end of year giving go a lot smoother. So plan and prepare, and we wish you all the best.
All right, so thank you everyone. Thank you, Lauren. Thank you, Marie. Thank you to all of our attendees. As I mentioned, this is going to be recorded, this webinar, so it'll be available up on our website for you to refer back to and for you to share with the rest of your organization. Thank you so much again for joining us today, and that concludes our webinar.